Hello, I'm Dave Gentry. Welcome to the RedChip Money Report. And for those of you new to this show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines a global multimedia reach with traditional investor relations, reaching a global audience of investors. Now, today on the show, you'll see interviews with two New York Stock Exchange listed companies. First, Xerium Technologies, symbol XRM on the NYSE. Xerium is a leading global manufacturer and supplier of two types of consumable products used primarily in the production of paper, machine clothing, and roll covers. We'll learn the story and value proposition directly from the president and CEO, Harold Bevis. This company's generating over $470 million in revenue with over $80 million in EBITDA. And Macquarie, a major investment bank, has a target price of $13, and the stock, as of the recording of this show, is trading in the $5 range. Then we'll see Pareteum Corporation, symbol TEUM on the NYSE. They're a leading international provider of mobile networking software and services. One of their big customers is Vodafone. And later we'll hear the story and value proposition from the executive chairman and founder, Robert Hal Turner. Before we go to our first interview, our quote of the week. How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. Quote from Robert G. Allen. Those of you who do not currently invest or have a stock trading account, take the initiative and learn. Get started today. And you can learn a lot from my book, Small Stocks and Big Money, which you can order at RedChip.com or at Amazon. But take your financial future seriously. You should be invested in the stock market. Now, the first interview today is with Harold Bevis, President and CEO of Xerium Technologies. Let's go to the interview. Harold, thanks for being with us today.
Thank you, Dave. Glad to be here.
Let's start with your giving us an overview of what your company does, Harold.
Xerium has 28 plants in 13 countries. We'll sell to customers in 63 countries. And fundamentally, we provide consumable products and services that are used during the manufacturing processes to make tissue paper, paper towels, consumer packaging, cardboard, fiber cement products for housing, siding, and nonwoven fabrics.
You've been around for almost 200 years, correct?
Yes, we have.
Give us just a brief history of how this company started and how you've evolved over the years.
Sure. The paper making process is an old process, to your point, and it had a cottage industry around it from the very beginning. And the process itself consumes materials during the manufacturing and conversion processes. And our company started up long ago in Europe around the inventors of the machinery in mass production of these products. And we still have our first factory in Glognitz, Austria. And as the industry has globalized over time and fully globalizing, we've grown with it, and we've installed plants and service centers around the world to stay with the industry.
Yeah, I want to note that Macquarie, a major European investment bank, has a buy rating on your stock with a $13 price target. In fact, they've called you their number one industrial small cap stock pick. I want you to tell us, investors today, the essential value proposition, or why should investors today consider positioning in your stock?
Very good. There's two key reasons. One is very simple, debt pay down. We have around $100 million equity account today, and we have articulated a goal to pay down $100 million more of debt. Just this simple program will double the size of our equity account for the same amount of shares outstanding. We started it last year. We paid off $23 million in the first year. We're underway with that program now, and that's the number one idea. Number two is the benefits that we expect to achieve from the repositioning program we just completed. We closed 8 plants. We modernized 10 plants. We introduced 90 new products. We are in great positions in many niches around the world: Turkey, China, Chile, Brazil, the Middle East, Eastern Europe. We specifically targeted business segments that were differentially growing. We put our assets in those areas. We tuned our machines to the designs needed for the machines in those areas. And we expect to grow from that and have a higher level of EBITDA on a go-forward basis. So the two main reasons that an investor should own our stock is we are going to pay down debt. We're committed to it. We've already started it. And we're going to fill up our new machines that we've repurposed and reinstalled with new business and growing markets in the world.
Well, back to the analyst covering your stock at Macquarie, he talks about your free cash flow and how important that is to your business and to the growth of your business. I want you to explain the business model and explain to our viewers how your company makes money.
We are a profitable company, as you can see. Just using round numbers, we did over $470 million in sales, $95 million of EBITDA, $23 million of free cash flow. So you can see that we have a healthy company profile here, and it's been healthy for a long period of time. And the reason for it is we have this global network of factories, a global network of products and services that we offer locally, and it's a very highly engineered product, and it is specified and installed by a technical sales force. The fundamental value add of our product is that it helps our customers achieve their targeted cost per ton objectives. And that's not easy to do. It takes a lot of technical work on the product and the service and the installation techniques. We've been doing it for a long time, and we expect to be profitable like this on a go-forward basis.
So these are consumable products, as I understand, some that you're replacing every 30 days for these companies. And then, so talk to us more about these actual products, and who are some of your biggest customers?
So most of our customers in the world are public companies. They're public reporters, International Paper, WestRock, in the Far East, Nine Dragons, Asia Pulp and Paper, in Europe, Stora Enso, UPM, in South America, Fibria, Suzano. These are names that perhaps you might not know, but they're large consumable packaging producers around the world. And they're growing, they're investing, they're healthy companies, and they're tied into the consumable products themselves. Most of their products that they make are also disposable. So we make a razor blade kind of a business, and their products themselves are usually disposable as well.
Harold, how will you continue to grow revenue and EBITDA? And again, I go back to the Macquarie report. He gives you a buy rating, $13 price target, basically says you got great free cash flow, and he expects you to continue to grow the company. How do you continue to grow into 17, 18?
There's two parts to it. One is GDP. Our products are primarily tied to GDP consumption. And as GDP grows globally, which it does, our products grow with it. Secondly, we have the repositioning program that we just accomplished. We specifically targeted quite a few niche industries around the world to grow in certain areas, and we expect to differentially grow in those areas on top of the normal GDP growth of our core products. So we hope that we'll be a natural grower and be pulled along into the market by being attached to the correct revenue streams.
What are the niche areas you're talking about that you've implemented, that you're targeting?
Specific niches that are coming on board now have to do with e-commerce and the whole e-media evolution. One dynamic in the industry is the decline of newspapers and hard copy media and the acceleration of e-commerce, ordering over the internet, e-media in general. And these are specific products, and they're growing very fast, and they're highly desirable by end consumers. And so we've had to add capacity machinery to make those type of products.
What are some corporate milestones that investors should look for in 2017?
There's two that are really important. One is this debt pay down program that I referred to. Many investors really like the simple story that we have around $100 million equity account and we're paying down $100 million of debt. We're basically doubling the value of our equity just by paying debt down, and we've already started on that journey. Secondly, the new reposition capacity that we've put in place and targeted to growth sectors, the key metric we're tracking internally is new business won. Are we winning new business to run across those new machines that we've put in new places like Turkey, like China, like Chile? And we are tracking the fill rates over a 2 or 3 year period. And we made our objectives last year. We set a goal to do $45 million of new wins. We hit it, and we set an even higher goal for this year.
Excellent. Harold, thanks for being with us today.
Thank you, Dave. Appreciate talking today.
Now, to get more information about Xerium Technologies and learn about dozens, hundreds of other microcap companies, visit redchip.com. And while you're there, Subscribe to our weekly newsletter. Join the RedChip Nation today. It's free. You'll get a plethora of stock ideas of emerging growth companies, interviews, research reports, industry news, and much more, and it's all free. Now, the next interview today is with Robert Hal Turner, Executive Chairman and founder of Pareteum Corporation. Let's go to the interview. Hal, thanks for being with us today.
Happy to be here, Dave. Thank you so much for inviting me.
Well, you're welcome. You know, the Internet of Things is talked about more and more every day. There are estimated 30 billion connected devices globally. That number is expected to soar in the coming years. I want you to give us an overview of where your company fits into this explosive market. And in doing that, talk about your customers and the problems that you're solving for them.
Okay, happy to do that. Well, first of all, Pareteum refers to this market opportunity as simply any device, any network, anywhere, anytime you need it. And that really reflects that almost everything going forward will have some type of radio network or sensor device, and therefore is going to communicate. So the network is no longer people communicating to people, it's people to devices, devices to devices. Think of oil field monitoring, think of electric utilities monitoring their equipment. But most importantly, the problems that we solve in this are really for the service providers. Because what happens is with all of these devices, there is significant information. And that information has to be communicated, and somebody has to pay for it. Somebody has to know how much is being used by one person or one device and how much money is due to the other. So our simple, elegant solution is basically to bridge all of these devices together through our software and to be able to help people decide who gets paid, how much, and when. So that's how we see it. And by the way, Hewlett-Packard Enterprise did publish the 30 billion number. We agree with that, but we like Salesforce.com's number better, which they say 75 billion devices over the next 3 years.
What is the essential value proposition for the company today? You've undergone a restructuring of the company, you've decreased the headcount, you've increased the margins. What's the value proposition? Why should investors own your stock today?
Well, I'm going to get to a long list of why investors should own our stock, but I'll tell you that our value proposition is very straightforward. For service providers who are our primary customers, and these are customers like Vodafone in Europe, like Zain in the Middle East, we facilitate their ability for them to resell their network capacity and to create additional virtual operators. And a virtual operator is just someone who doesn't own the underlying network, yet owns the subscribers. So we make that happen with our software. So our value proposition is seamlessly facilitating for service providers to do this and to provide the solution to the complexity of all these different types of hardware and software working together. So we create new sources of revenue and we take inefficiencies out of the marketplace. And we do this in this bridge building scenario that I mentioned earlier by doing it virtually, transparently, and effortlessly. It's solving the chaos problem. That's what it boils down to.
And well, actually, I'd like to add to that as part of the value proposition is the company is actually getting better. You've restructured it. You've brought in a new management team. You've increased the revenue per employee from $57,000 to $143,600. You've improved the margins dramatically. So I always like to tell our viewers, good to buy a company at the time that it's starting to get better, short a company when it's getting worse. You're obviously getting better. Talk
Absolutely.
to us about your recurring revenue model and how you actually make money.
Well, we're very fortunate as we did this restructuring and the turnaround and really recovered from the money-losing company it was in the past to reaching EBITDA positive in the end of the third quarter and being EBITDA positive as we go forward. We're very fortunate to have over 1 million subscribers running off of our network and platform. And these million subscribers are just that, a subscription-based model, monthly recurring revenue. So when we talk about an expansive global strategy, it's really to have access and reach to add more subscribers. And the subscriber could again be a person or it could be a device. But every time we do that, we ring the cash register with more monthly recurring revenue. So it bills and bills. So our business model, very simply, is a monthly recurring revenue subscription based upon subscribers. And within the devices, there's something called a SIM card, which is nothing more than the intelligence that makes your phone work. And that's what we count as the unit of measure, if you will.
Thank you, Hal. Hal, briefly talk to us, and we've alluded to it, but talk to us about the actual restructuring efforts, how it will affect your bottom and top line growth going forward.
Yes, it was quite a challenge. When I came into the company in late 2015, the company was burning cash dramatically. By mid 2015, the company had over 300 employees. We went through a restructuring that had 3 phases, and the 3 phases really focused on people, processes, and locations. By the end of the third quarter, we had reached EBITDA pro forma break even. Employment levels had come down from the mid-year 2015 highs of roughly 300 to less than 70 people. And as you already noted, the key measure that we look at, which is revenue per employee, had gone up dramatically from roughly 57,000 up to about 150,000 or more. And it's increasing, quite frankly. So the restructuring took $10 million of annualized operating expenses out. As I mentioned, we reached the break-even point of pro forma EBITDA at the Q3 level. That was partly due to the sale of our subsidiary that was losing money. And we have done everything that we can to turn this company into a platform for growth. And it is now ready for growth. We brought on a world-class sales and operational leader to be the CEO of the business, Vic Bazo, who has worked with me in the past. So I'm very, very happy that we've restructured the company, turned it around, poised and ready to grow. And of course, we're looking for every avenue of growth, be it organic from our current customers and new ones that we will add, or inorganic from M&A. So big future ahead for us.
What are the key corporate milestones you hope to achieve in 2017, Hal?
Dave, I have given some guidance earlier at the end of the third quarter to address people toward at least a 25% lift in our normalized Q4 quarter run rate. And that would be a very modest uptick. My team and I are much more bullish. I am definitely expecting that we will go above the 25% lift. And I can tell you that our major objective in terms of a KPI is to reach employee sales ratios above 200,000 per employee. And I think also that the investors can expect a continued laser focus on our mission for profitability. We are going to grow, but our intention is to grow and maintain positive operations and margins. So 25% is sort of the baseline that we're thinking about. But again, we're very assertive in our focus and our operations. And I'll be disappointed if we don't go beyond that. But I can guide based upon what I see today, at least a 25% increase. I hope that I'll be able to give better guidance a little bit later on in the year.
Hal, I want to thank you for being with us today. I think you've given us a good overall summary of the company, and I'm sure our viewers will be watching your stock very closely. Thank you so much for being with us.
Dave, thank you so much for having me on.
Now, to get more information about Pareteum Corporation and to learn more about hundreds of other microcap companies, visit RedChip.com. And while you're there, subscribe to our weekly newsletter. It's free. Join the RedChip Nation today. You'll get a plethora of stock ideas of emerging growth companies, interviews, research reports, industry news, and much more. And again, it's all free. To recap today, we met with 2 New York Stock Exchange companies, Xerium Technologies and Pareteum Corp. Xerium is a market leader in an industry with a very high barrier to entry, a 200-year-old company. Macquarie, a major investment bank, has a $13 price target on this company with a buy rating. Again, with their new plant in China, and further expansion underway, we expect very good things ahead for Xerium Technologies. And Pareteum, classic turnaround play. They've recently expanded the relationship with Vodafone, and they continue to attract new carriers to their platform. With more and more devices becoming connected, some 30 billion estimated by 2020, the market opportunity is immense for Pareteum. Find out more about both of these companies at RedChip.com. Now remember, these stocks are for your speculative money. The gains can be significant. You must also be prepared for the downside. And keep in mind that some of the companies we put on the show are client companies, and we do have stock positions and are paid in stock by some of these companies. Check our disclosures. Remember, I'm not always right. I am and can be biased at times. I do think, however, we're bringing you great opportunities. We have a number of stocks that have done quite well for our investors, not only in 2017, but in years past. Thank you again. I'm Dave Gentry. I'll see you same time next week.